And let's go ahead and talk a little bit about Vince Vora. Vince is our next presenter. We've been working with Vince for a number of years. I absolutely love Vince's methodologies, and in particular, what I like is really his ability to take very, very kind of technical terms and make them interesting. I'm sure he's going to look at a lot of charts with us today and be really, really specific about everything that he's talking about. And so with that being said, let's go ahead and change the presenter over to him and get him on here. So Vince, let's go ahead and turn on your audio. Okay. All right, Vince, you should be on.
Good morning, Jeff. Can you hear me?
I'm doing, yeah, I can hear you great. How are you doing this
Excellent.
morning?
How are you?
I'm doing great.
Great. Thanks for
Sorry
having
that
me
we're
back
running
on.
a little bit late. I tried to catch up.
Oh, that's okay. Not a problem at all. I don't mind. Not a problem at all. Okay, I did share my screen. Hopefully, you should be seeing a slide that says veracity.
I can see it. It's coming through. I can hear you. I'm going to get out of the way.
Okay, perfect. Thank you. And welcome, everybody. Glad to be here with you again on a Saturday. Before we start off, I really do want to thank Jeff and everyone at MetaStock. They have been great partners of ours over the years, and they always put on great events. I'm really happy they included me on this one as well. Today, I do want to speak to you about what I always call my baby, which is veracity. It's a system that took me many, many years to put together. And I'm really happy to be able to share that with you today. Before we get started, I do want to let you know that trading, as many of you will probably know, can be risky. So please don't trade with real money until you are completely comfortable with the system you are using. Again, I'm Vince Vora, the head trader here at Trading Wins. I have been doing this for over 30 years now. Over that time, I have developed several strategies and trading systems. I want to show you what I call my baby. It's the one I'm most proud of today. I've also coached many, many students over that time. I've managed hundreds of millions in assets. And nowadays, our services are used not only by retail traders such as me and yourself, but also several hedge funds as well. So in today's presentation, what I'd like to start off with is my money management rules. I do this in almost every presentation. I think it's absolutely a crucial piece of your overall trading plan. And if you follow this short set of rules that I've put together, one thing I can tell you is you'll never blow up your account again. Now, hopefully you haven't to this point, but hopefully you never will. And if you follow these rules, I can promise you that. Then we'll talk about the components of the veracity system. It really all came together as part of my search for the Holy Grail as a trader. You know, most of us do search for that Holy Grail, even though we know there's no perfect system out there. But this is my attempt at it, and I think I've gotten it about as good as it gets. I am going to talk about how it works and why it works, but more importantly, how it can work for you as well. Please, if you have questions, type them in along the way. I will try to keep an eye on the chat box. And if not, I can certainly try to spend some time near the end of the presentation answering your questions. So let's get started. I only have a handful of slides and then we'll get to the charts. And as Jeff said, we'll go through as many examples as we can today. So let's talk about money management. First rule, and you know, it may seem a little silly when you first read this, trade with a positive mindset, but having coached thousands of students over the years, one thing I can tell you with certainty is that they tend to make the most mistakes and the biggest mistakes when they're not fully focused. So when you sit down to trade, turn off all distractions and really do focus. And if it's a day where you're just feeling a little off, maybe a little under the weather, you know, in the wrong kind of mood, same thing, turn the laptop off and go do something else. You're really prone to mistakes at those times. So make sure you have a clear head and no distractions at all. It's very important. Secondly, when it comes to trading, you know, finding those entries and exits is certainly important. But it's how you manage that order once you're in it that really matters. Veracity will certainly find those entries and exits for you, but it's up to you how you manage that order once you're in it. And staying disciplined and following your rules is crucial. So the only way I found to be able to do this consistently is to trade with an amount that feels completely insignificant to me. Now, for some people, you know, that dollar amount will be very small, will be a couple $100. For others, it may be several thousand. The amount itself doesn't matter. What matters is that it feels completely insignificant to you. That way you won't get scared out of it early. You won't be nervous. You'll have a clear head. You'll be calm and you'll be able to manage it the way you should be. Now, one of the other ways we try to reduce risk in the market, because every minute you spend in the market, there's risk. That's a reality. How you deal with it and how you limit it is what really matters. And one of the things that we do here at Trading Wins is never place more than 5% of our account balance in any one trade. Now, that to me is just a starting point. What I encourage you to do is try to reduce that percentage amount as you grow your account. Okay. So the bigger your account gets, you want to take that from 5 to 4.5 to 4 to 3.5 to 3, etc. If you can get to the point where you are trading 1% of your overall account balance and still have a decent amount of money in that trade, I think you can safely say you've made it as a trader. At that point, you know, you should have no problem whatsoever sticking with a trade and managing it appropriately. And you will have been very successful and continue to be so, because by placing 1% of your account balance in any one trade, even if it completely blows up on you, really you're losing a very small amount. Okay. Now, there are things when it comes to the markets that we cannot control. And I hate to bring it up, but one of the most obvious examples has always been 9/11, right? None of us could have anticipated such an event, and nor could we have, you know, really done anything about it. So after that event happened, one of the things that came to mind is, in order to make sure you don't blow up your account, make sure you don't take a huge loss. One of the things I started doing was always keeping half of my account in cash. Okay, now, you know, it may seem silly, like it's not really earning anything, but it's a real safety net for you. Okay, if you follow all these rules, again, you will never take a big loss and you will never blow up your account. And that's what this is all about. I'm sure you've all heard that, you know, living to trade another day is what most traders do. And this will make sure that you can trade for the rest of your career in a very comfortable manner. Okay, so always keep half the account in reserve. That way, no matter what happens, you have money to put back in and make up those small losses. The other thing is, and this is very, very timely, very appropriate with today's markets, with the kind of volatility we've seen lately, is one of the things you definitely want to do is spread out your trades. Okay, whenever there is a strong day, be it up or down for the markets, you're going to see a lot of trade setups in that one direction. So if the Dow's up 300-400 points, you know, or like we've seen lately, up 500-600 or down 500, right? You're going to get a lot of setups in that one direction. The last thing you want to do is jump in and put 6, 7, 8, 9 trades in that one direction. Because how many times have we seen the market completely retrace the very next day, right? It happens all the time. If that were to happen to you, you'd find yourself in a huge hole right off the bat. So what you want to do is select one, maximum 2 of the highest probability trade setups you can for whatever time frame that you're trading, and leave it at that. Okay, and I'll show you as we go through this why that's extremely important. Now, a couple other sayings that we live by here is, you'll never go broke taking profits. And I leave this on the slide only for those of you who are truly just starting out. The reason being is, if you get used to banking those profits early on in your career, it'll do a couple things for you. Number one, it'll help you grow your account, which is absolutely crucial because most of us start with very small accounts. It'll help you grow your account, but it will also not only help you gain confidence in the system that you're using, but in yourself as a trader, and that will carry you a long way. Okay, and if there's only one thing you take away from this today, it should be this: you need to truly understand that this is not about you and whether you're right or wrong. So if you're in this to become the world's greatest stock picker, you're in it for the wrong reasons, and I can almost guarantee that you'll lose money. Okay, you can't control the market, and you never will. So don't even bother trying. It's not about whether you're right or wrong, but it's all truly about how much money you make when you're right compared to how much money you lose when you're wrong. So executing your trades correctly and controlling the amount of risk you take and getting rid of those losers as soon as you see them turn into losers is absolutely crucial. So if you follow those 5 money management rules and you remember that to check your ego at the door when you sit down to trade, and when you see a positive setup, you jump on it. But if you see it turn around on you, you won't think, uh-oh, here we go. I'm going to take another loss. I can't tell my spouse I'm going to take another loss. I got to stick with this. No, no, no. You get rid of it as soon as you can. Okay. So let's talk about veracity. Veracity involves several indicators and oscillators. Over the years, trading it and testing it, we tweaked it here and there. We finally come up with a set of indicators and oscillators that work extremely well together. Now, I know how well it works because of all the backward and forward testing and trading with it over many years with real money. But here's my challenge today: is to show you what it can do for you. And what this does, it's designed to do, is to catch the big moves. So over the years, I've designed many systems: our winning momentum strategy, our favorite trade strategy, many others. This is the one that was truly designed to catch the big moves. But the reason why it took as long as it did is because I hate risk. I absolutely hate risk. Early on in my career, I took a very, very substantial loss. Okay, I thought I knew what I was doing. I knew nothing about trading at the time. I jumped in, had a few winners, got overconfident, and then took a major loss. And that really is what made me the kind of trader I am today. Extremely conservative, extremely safe, and I only will take trades that are very much in my favor. And that's what veracity is all about. It will keep your losses small without capping your potential gains. And that is truly the magic here. Okay, it maximizes that safety component without limiting your gains. Because normally in the market, risk is very much related to reward, right? The more reward you take, the more, the more risk you take, the more reward is possible, right? The less risk, the less reward is possible. Here, your risk is capped without capping your gains, okay? So not only will it help you identify some pretty nice short and swing trading opportunities, but also longer term opportunities. So whether you are a day trader, whether you are a swing trader, or whether you're an investor for the long term managing a retirement account, this is going to find some pretty huge trades for you. And I'll show you many, many examples on many different time frames. It also helps predict major market moves if you plot this on the indices like the S&P, the Nasdaq, the Dow, etc. Okay, so let's get to the charts. Let's have a look at veracity. Now, before I get there, I want to show you just 2 charts here without any indicators on it. I mean, this is the 20-period moving average, but I have that on all my charts, and I'll explain why in a second. But no other indicator on here. This is a chart of ABMD, a biomed, and the reason why I'm sharing this with you is because one of the easiest things you can do as a trader to ensure your success is to always make sure that you only focus on charts that are clearly trending in one direction or the other, meaning up or down, but a nice, strong, clean trend. And if you look at a biomed here, going all the way back here to last June, and then, about a year forward here, beautiful trend. right? Nice, clean, just a slow, steady grind higher. If you look at the candles here, most of them are very similar in size throughout, right? And then here, since June to now, it's been very choppy, right? You look at the candles, all different sizes. You can clearly tell the difference between the right side of the screen and that first portion. So trading charts like we've seen here in the last few months, okay, is a recipe for disaster. You're just going to get chopped around. You're going to get in and get stopped out, get in and get stopped out. There's no clear trend in place, no clear momentum in either way, and that is where you go wrong. What you always need to make sure you do is trade with trend and momentum on your side. Okay? Have a look at a chart of Tesla. Now I know many people love to trade Tesla. Okay? And if you're day trading it, it's fine. But if you're trading it on a daily time frame or higher, it's a disaster. Now let me take off the indicator here for a second. I don't want you to lose focus there. Have a look at this. Isn't it one big chop session? All over the place. No matter where you try to get in here, it's a recipe for disaster. So stick to charts that are nice and clean. It will really serve you well. Now let's add on that indicator again and have a look at this. So first of all, we have the blue line, which is the 20 period moving average. Now I use that to help me judge the amount of momentum behind the move, okay? Veracity will tell you when to get in and when to get out, but the 20 period simple moving average, that is, and by the way, we've tested it with weighted with exponential different time periods over the years. The 20 period simple moving average works best. This will help us identify the amount of momentum behind the move. And what we mean by that is the slope on that 20. So if that 20 period moving average is flat, there really isn't a whole lot of momentum behind that move. If it's sloping in the direction of the trade, then there is momentum. And the more significant the slope, the more momentum there is behind that move. So if you look at this chart, there are a number of things here, just like they were on Price's system and many others. You'll see these little diamonds, you'll see the arrows, and you'll see the exit flags. So the diamonds represent what we call a setup bar. That means that there may be a trade coming. It's not ready quite yet. It's just giving you a heads up. Hey, we may be getting into a trade. If the formula kicks in, then we have an arrow which says now it's time to get in, okay? And then of course when to get out, the exit flag. Now for long trades, you'll see green diamonds, green arrows, and the green flag, along with all the bars when you're in the trade being painted green, okay? That is to help you keep you disciplined and not getting scared out of that trade, okay? I thought that was a really smart design by Jeff and his team to keep all the candles the same color. That way, you know, normally when you get into a trade, you see a couple of green candles, it's fine. But when you see a little pullback and they turn red, you start to question yourself and, you know, potentially get scared out of there. This really helps you remain disciplined. If you see red diamonds, red arrows, red flags, that has to do with a short trade. Now, as you can see on this chart, there are numerous setups, right? The goal is not to take them all. If you did, you'd still do okay, but that's not what we want to do. We don't want to take every trade. The problem with the programming here, it was not an error on MetaStock's part. In fact, they did a fantastic job with this. But remember what I said earlier about that balance between capping the losses, right? Limiting the risk without capping the upside. In order for us to allow the runners to run, we couldn't eliminate some of these signals without eliminating some of the big runs. Okay, so we decided to keep them in there and just teach you which ones you should be focused on and which ones you shouldn't. Now, we do have a class where a recording that comes along with the indicator that will explain exactly which ones you want to take and why. Okay, it's a 1 or 2 hour training session that we'll send you with it, where I explain in detail why you want to trade one over the other. But for this presentation, what I want you to focus on are the ones that happen when there is slope on that 20-period moving average. That's it. You're going to see numerous examples, but if you strictly focus on the ones that appear, that set up and trigger when there is a slope in the direction of the trade, and I always look for about a 45-degree angle. Okay, that's what I consider very significant. So a 45-degree angle such as this, or a slope even more significant than that, is what we look for. And I will challenge you, and they're out there. There are a few losers during that time, right? Like this, where we get in, it gets us right back out, right? That will happen from time to time, but the vast majority of the ones that have slope are winners. Okay, now, so that's what I want you to focus on. I also want to mention that this works on anything. So any time frame, 1 minute chart, 5 minute, daily, weekly, monthly, it doesn't matter. Any market, stocks, futures, forex, whatever you prefer to trade, Bitcoin, it really doesn't matter what it is. It's designed purely with technical analysis, no fundamentals whatsoever, technical analysis, and it's meant to take advantage of trend and momentum. As I said, the big moves, that's what we were looking for. So every once in a while, you'll get a nice stretch, it'll get you out and it'll get you right back in, okay? That, again, is for that safety component. If it notices that something is going wrong, it will get you out immediately. Getting you back in here only costs you a bit of commission, right? Commissions these days are so insignificant that I would much rather get out and get back in a candle or two later than risk having this roll over on me, okay? Apple is a great example. Now, Apple, has been trending really nicely for a while, but recently has rolled over. Well, you can see here, it got us out before that downturn, and that's what's important. Okay, that's what's truly important. Again, that's a daily. Here's a weekly. And again, we only want to focus on the ones with slope, right? So, there was a reason why this one here triggered, okay? But whether you took it or not, hey, you took it, you would have got it out with maybe break even, small loss, really doesn't matter. But why risk that? Why gamble that when the moving average isn't sloping yet, instead of waiting until it is sloped and then you have a nice easy ride, right? And you'll notice with these, you get in, it moves. As soon as it starts breaking down, it gets you out. Okay, you don't give up a good portion of those gains. Gets you back in, gets you out, gets you back in. Look how early it gets you out here. Okay, so some would say, well, again, why wouldn't I just get in here and stay in it up until up here? Along the way, there are many things that happen day to day that move the markets. We don't want to take that risk. Things can happen very quickly. When things turn over, they can go very quickly. So here, it got us out again. This is the weekly chart, got us out. Now we'll wait until we see some sort of sign that Apple may be coming back, okay? Danny made a great comment, great question. Danny says, if you compress the timeline, isn't the slope going to change? It will. So you want a nice comfortable view. I mean, obviously, if I zoom in, right, it will completely change it. You want to fill your screen, okay? You want to fill your screen, but you don't want to take it to the point where you can barely see the difference between one candle or another. So what I like to do is have on a daily chart, this is a weekly, but on a daily, which is what I trade mostly, I like to have 1 year of data on the chart. And that to me is a nice, comfortable view. Okay. But, and if you're going to add on other indicators here, even though it's not necessary with veracity, but if, you have a favorite indicator that you want to add on, you got to remember that the more indicators you throw on here, it is going to squeeze your chart and change that. So if you want a nice, comfortable view, okay, but great point. And again, the time frame doesn't matter. Daily, weekly, monthly, 1 minute, 5 minute, it really doesn't matter. Let me bring in some more data. The other thing I love about Veracity is, it's so easy and clean to see that when a stock is consolidating, right? That moving average is flat. We don't want to trade there, whether there's signals coming in or not. We want to avoid that. But when you have a nice long run like that, a nice long channel, and then you break above the high of that channel and you've started to get slope on that 20, those are some fantastic trades, right? Look at this one here. This one was completely flat, right? So we would not have taken this trade, okay? Now, if we missed that, we could kick ourselves and say, hey, wow, look at that run. I missed it from, somewhere around the $17 range all the way up to about 50. What a trade I missed. Who cares? There's so many out there that your job is going to be to compare one to the other and pick out the one or two trades that have the highest probability of success. And that's really what we cover with that training course that goes with this indicator. But when you reach an area like this, for example, this one we would have taken, okay? And one of the reasons why, and again, we go into it in detail, one of the reasons why is a break of the high of that recent range, okay? So there are other reasons why you might take some trades, but others you won't. So if you miss this, who cares? There were other trades to take. The point is, you're not taking a loss. You're not going in on a trade that is risky where you shouldn't be taking that risk. That's what we want you to avoid. So again, here's Amazon. You see how many setups and trades? You don't want to take them all. Now, if you did, you'd still be fine, more winners than losers. But you don't want to do that. You want to focus on the ones. Let me zoom this out. You want to focus on the ones that have slope. And when something is trending as strongly as it was, it's easy. Get in, get out, get in, you get out, get in, get out. Now you notice that there are sometimes setups that don't actually trigger, okay? So you do want to wait for that little arrow. Okay, here's Amazon on the daily, was trending nicely, got us out before that big drop, but once, we got that initial pullback here, we had that slope, got us short, and we've been short ever since, okay? And again, the time frame doesn't matter. Weekly, look at those moves on the weekly. See, it grabs the big moves. That's what it was designed to do. But you'll notice that as soon as it notices that, something's going wrong, it gets you out, okay? It didn't collapse. It set up again, you're in. Gets you out quickly. This one got you in, got you right back out immediately. I don't mind those at all, okay? Rather sit through a couple of those in order to catch the big one. Same here. Got us out, got us right back in, went for another ride. Look how quickly it got us out here. Did not give up all these gains, right? When it pulls back like this on each of these points, we don't know when this type of move is coming, right? But with the programming in there, it gets us out, maximizes that safety component, and then if it turns around, it gets us back in, or it looks for that short setup, okay? So it's all there. Carrie says, will this work on cryptocurrencies? Yes, it will. Anything that you can chart, okay? Forex futures will show you a few. I can here. I don't trade cryptocurrencies, so I honestly don't follow it. One thing I can do is show you the NYSE Bitcoin index here, okay? Now on the daily, there isn't a whole lot of volume, so you see little dots. You'll see the setups here, and you can see how well it took advantage of the ones that were sloping nicely. And even here, you can see how it got you in here and got you out before that collapse, well before that collapse. But if we go to the weekly, it's a little more clear. You can see the candles, right? Again, with slope on that 20 and a nice winning trade there, you had a huge winner here, right? And now we had a small loser on this short, couple of setups that haven't fired off yet, but certainly looks like it's about to fire off short here rather than long right now, okay? Again, I don't trade cryptocurrencies, but I thought I'd share that with you. How many of you have recently got into the cannabis, trend here lately. Canopy Growth, CGC, was one of those companies. Again, many setups here. You want to take the ones with slope or the ones breaking out of a range, clearing the high. Okay, channels. How many of you trade channels? We go over that in the training that we give you with this indicator. If something's trading in a channel for a while and breaks the high, then we want to get in there with slope or without slope. And if you have slope, when it breaks that channel high, even better, okay? But again, the one thing you can tell here is that the big moves that happen, it captures just about all of them. It will miss one every once in a while, but it captures just about all of them, okay? But if things go wrong, it does get you out, okay? Now, let's go over a few other things. Who's traded or who likes to trade Forex, right? Let's look at a few of those. Here's the Euro USD, okay? Again, captures the big moves, right? The no-brainer ones, the real safe ones, okay, are the ones with slope, like one here, right? Why waste your time along the way with something that doesn't have slope compared to something that does? Unless we go into a channel and the low of that channel gets taken out and then we're in short, okay? Again, we go over this in detail. You don't have to worry about it. John wants to look at ES, or let's look at the ES, which is the S&P futures, okay? Let's have a look at the S&P futures here. We can look at gold and crude as well. So this is the S&P on a daily time frame. Again, every once in a while we'll miss a bit of a move. You see here, got us in early, got us out, first sign of trouble, it missed that. But caught a nice move there, caught a huge move there, caught all these little moves along the way without giving up the profit. Recently called a short here, okay, and then got us out quickly. So maintaining that profit, okay. Now we can trade any. I don't know what the 1 minute would have looked at like yesterday. There were a couple. There we go. Some nice trades on the 1 minute if you day trade it, right? You can trade it with the 5, anything you want. All right. Mark is asking what the black line means. I think you're seeing it black. It's blue on my screen, so I'm assuming you're talking about this line here. That's the 20 period simple moving average. Mark, we only want to look at the setups and the triggers that happen along a sloping 20 period moving average. So if we're looking to trade short, we want to make sure that 20 is sloping lower. If it's ever flat, you don't want to take those trades, okay? What else can we show you? Let's look at NQ, right? The NASDAQ 100 futures. And actually, you can look at the ETFs as well, right? So the QQQ, that's ETF for the NASDAQ. Now that's the daily. Let me zoom out. Okay, again, similar picture. You want to see the weekly. There it is. The weeklies work beautifully with the indices, right? Beautifully, just like the SPYs, right? SPY is the ETF for the S&P 500, weekly, monthly. Look at those moves on the monthly. And this is what I meant by in the slide when I said that you can use it to forecast market moves, the overall market moves. So, you know, when we came out of this dip and we triggered long with slope, you know, that was the start of a bull market, right? Now, the bull market didn't end here. It did get us out at first sign of trouble, but then it got us back in, right? And again, it gets you back in and out. Yeah, you might take a small loss, but it's there to protect you. So when that happens and gets you right back in, you know, it's there for a reason, but it does capture the big moves. And so far, despite the downturn we've had on a monthly time frame, we are still in a bull market here. We're not quite out of it just yet. So we could be in for a nice bounce here and another run higher on these markets, okay? Shirley's asking for a look at Citigroup. By all means, please let me know if you want to see anything. You know, one of the things about being a system designer when you're in a live format your biggest fear is that someone will ask you for a chart and you'll bring it up and it won't look very good, right? With Veracity, I really don't have that concern, and I'm happy to share it with you because I will tell you, it's not a perfect system. There will be some losses, but it's more about knowing which trades to take and which not, because you're going to see a lot of symbols, a lot of setups, but you only want to focus on a certain few. Here's the weekly chart, and I'll try to scroll through for you slowly. Hopefully it doesn't shake up your screen too much, but you can see that when it's trending and you get these setups, they work out very nicely. Okay, same to the short side. It's it's not, there's nothing magic here. There's a set of indicators and oscillators behind this that when they line up all together, they are very, very consistent. And what you want is momentum, okay? Trend and momentum in your favor. So when you have a slope and you have that setup, that's when they tend to work out very, very well, okay? Anna has another great question. She says, do you take into consideration different time frames? I do. What I look for, and this is where I will start sort of from the highest time frame and work backwards. So if we look at Citigroup here, Citigroup has been consolidating for a long time. Okay. Now, if we get another setup long here, okay, and especially if we break the high of this consolidation area, then we know we're in recovery mode. So let's say we get that here on Citigroup. Now I know that the longest time frame is telling me this is going higher. So I would go down from there to the weekly and look for a setup to the long side. Then now I know I've got monthly and weekly set up. And then if the daily sets up long, then I'm all in on that. Now, you can trade on any time frame you want, but confirming your setup on two higher time frames to me is a way for you to be even more conservative. And you can use that even on the smaller time frame. So if you're trading, say, on the 15-minute time frame, you can look at the hourly and the 4-hour, or the hourly and the daily, to confirm that you're trading in the same direction of the overall trend. Okay. Mark, I'd love to answer your question about option back spreads. I'm running out of time. I do want to show you many other examples. One thing I will tell you is that if you're not an option trader, you should learn as much as you can about options with Veracity, because not only can options make this even safer for you, okay, because it can limit you even more. Let's say you're gonna you're gonna buy shares of Citigroup at $65, right? To buy 100 shares, that's $6,500. To buy a call option on Citigroup could cost you $3, right? Where your investment would be like $300 compared to $6,500. So it could really limit your risk even more, but you can actually leverage this with options. I almost exclusively trade options, and you can do really well with different strategies like back spreads and many others. Okay. Let me get to a few other symbols here. I see the questions coming in at a rapid rate. I want to show you as many symbols as I can here while we have time together. Here's MKC, which has been on a nice trend lately. So another perfect example. When something isn't moving, when it's just consolidating sideways, you want to ignore these symbols, okay? If anything, you want to try to just box it and look for a breakout, okay? But the no-brainer trades are when you have slope. When you have slope, why take risk somewhere else when the odds here are very, very much in your favor, right? That's what you want to focus on. And again, any time frame is fine. Daily, weekly, monthly, right? There's the weekly. Here's the monthly. Now imagine a monthly. If you're managing a retirement account, okay, number one, it won't take you very much time to trade with this because you can look at this once a week or once a month. The scanner that we have that I'm going to show you in a moment will really, really save you a ton of time to find trade setups. But along the way, imagine if you're trading dividend paying stocks and you get into something like this and there's a high probability it's going to continue going higher. You have a nice trend nice momentum in place. Veracity is called to buy. You get in there, you set it up, and you're collecting dividends along the way. If you're an options trader, you can sell covered calls along the way, increase the amount of premium you're taking in, right? If you're going to buy stock, I would always marry a put to it, okay? Always lock in that or cap that potential loss. You want to be as safe as possible, because when it comes to the markets, keeping it simple is best, and reducing risk is absolutely crucial. If you don't reduce your risk, you will not succeed at this, okay? So trade in a safe way, follow the money management rules, and only look for the trades that are sloping in your direction, all right? What else can I show you? Let's show you a couple more futures. How many of you trade crude oil or gold, for example? Here's crude oil lately, gone on a very crazy ride. Again, you can see the symbols. Have a look at the weekly. Remember when it was trading over 100 and then collapsed? Okay, there's that move. Then down from went to 100 back to about 40 and then down to 26, and now it's been recovering, but recently it's had a tough time. It's gotten us out. It doesn't matter, again, what you want to trade. Up here, there wasn't much momentum. Again, there was a reason for this, which was a break of the lows, the recent lows. Okay, we'll go over it in the class. But even if you miss this, it's okay. Even if you don't take this because it's flat, it's okay. Here's the no-brainer trade, right? No-brainer trade. And it may seem small compared to those, but when you have a lot more winners than losers, and when your winners are greater than your losers, that kind of math really makes it difficult for you to fail at this, okay? And as you grow your account, you can scale this as you wish, by putting more money into each trade. It really is that simple. What else can I show you? Let's see if there are any more symbols. John was asking for AMD. Let's look at AMD. Let's see what it shows. Oops. Let's try that again. AMD. There we go. So AMD, here's a daily. So again, it does a real good job catching the big moves. Every once in a while, it'll miss it, and that's okay. All right, let's look at the weekly. The point, see, there we go, caught the weekly moves on a break of that recent channel. Missed one here, caught one here, okay? But again, gets you out before you give up all your gains. The other thing I will tell you, and the reason why I'm not worried about showing any stock here, is because one of the other things I do, and I would encourage you to do, is to do this. When you take a stock, no matter what time frame you're on, or a futures contract or forex, whatever it is, when you see a setup, look back, look to your left, look at previous setups, and look at, a similar setup. Like this one, his one was slope. So I would look back here and say, hey, did the previous ones show up? Like, did it call the previous moves like this? And were they successful or not? This chart does not impress me too much, right? If I were to look at a monthly chart of AMD, it doesn't really impress me from the signals, right? So maybe I'd skip it, right? But if you come across another stock, let me just throw one up there, FTNT. Here, if I saw a setup, right, and the stock was still trending, yeah, I'd take it. Absolutely, I'd take it, because you have string of successes, right? There's some that it just, depending on volume behind that stock, the current trend, some are more consistent than others. So always look at that, okay? Keith is asking for USD. I think it's the ZAR. Let's have a look. There it is. And again, capturing some real nice moves. The ones with slope working out real nicely. So again, you can look at this and say, wow, I missed that move. Okay. It's okay. You wait for this one and you catch it. Real nice. Back in here, same thing. Back in here, same thing. That's what you're looking for. Okay. Nice and clean. Now, I'm starting to run out of time, so I'm going to quickly show you the expert commentary that Jeff and his team built in here. which I think is another great part of this. And maybe this Forex contract isn't the best thing to use as an example, but I'll use it anyway since I'm here. The expert commentary window, if you click view and expert commentary, it'll bring it up and it'll explain a little bit about me and trading wins, etc., and veracity. But it has this space here. You see this blank space between these two paragraphs? This is the section that applies to the actual veracity indicator. Now, on the far right, you'll see this little black triangle here. And that always defaults to the most recent candle. When there's no trade, okay, the candles appear black and white, there's no trade, this space will be blank. But you can either use the arrows at the top of the expert commentary window or just click above any candle, okay? Like if we click above here, it'll post it here. And then, sorry, that was the wrong candle there. I was looking for the setup. And now it'll post some text in here that relates to the setup or the trigger or the exit. Okay, so this is the setup and it'll tell you veracity indicators currently showing you a short trade setup. Now it'll go a step further and it'll tell you to confirm that it's a valid shorting opportunity, you must wait for a trade below the setup bar's low to confirm a short signal. The reason why we did this is, say you're trading on a daily time frame, you see this the night before, right? You're searching through some charts at night, market opens the next morning, but you're going to work, you want to set up your orders. Well, you know exactly the level that you want to get in at, right? So you can set up a buy stop or a short order in ahead of time, okay? Now, obviously for triggers, the arrow will show up. This black triangle will move to the next bar and it'll confirm that it's in a short sell opportunity. And when it's time to exit, it'll tell you that it's time to end and get out, okay? But along the way, it will identify levels. You see back in here when we're in the middle of the trade, it'll identify a level that you can use as a trailing stop along the way. So with each bar that we move, that level will change if necessary. See, now it went from 1354 to 1334. It updates that level so you have a trailing stop along the way. So you can always have a stop order in if you want, or it even gives you another option, right? You can exit if the CCI closes below zero, okay? So it really holds your hand through the whole process and walks you through that. And we color the text the same color as the direction of the trade. So short trades will have red text, long trades will have green text. I thought this was brilliant. And the other thing is that will save you a ton of time is the scanner. So if you go to your power console, the little P here at the top left-hand corner, go to the Explore tab, and at the top here section are all the systems that are programmed into MetaStock. Go to the bottom here, you'll see mine, Vora Veracity, Setups and Vora Veracity Signals. The setups are those little diamonds, the signals are the arrows. So you can search for either one. I like to search for the setups. Then at the bottom here, you pick your markets. What I've done is pick the Dow 30, and the NASDAQ 100, along with the major Forex pairs, 36 Forex pairs. To the right, you pick your time frame. I'm leaving it as daily. And then all you do is click Start Exploration at the bottom right here. Once you do that, this panel comes up, and you'll start seeing it work through here any second. Now, there it goes. It'll tell you how many instruments you've selected. It'll show you how many it's scanning through, and you can see how quickly this is. Now, you know, I'm running GoToWebinar and I'm running MetaStock and I'm running numerous things on my laptop here, and you can still see how quickly it does this. Now, once it's complete, it's going to throw up a number of symbols here that have setups. And there's a number of columns, long, short, close, slope, and symbol. If there's a number 1 in the long column, that means it's a long setup, okay? The ones with zeros are not long setups. In short, it's the same thing. If you see a number 1, it's a short. If 0, it's not, okay? So you can double click on the column header here and sort if you're only looking for longs. You can do the same with shorts. If you want to sort by price, you can sort there. Here's the crucial one, slope. Remember that 20 period moving average? You're looking for the strongest slope, right? So if you click on here and you slope and you search from the biggest number down, these are obviously the bigger the number, whether it's negative or positive, okay? Because negative is a short, so you want to see a negative slope. Positive, you want to see a positive slope. But the bigger the number, the more significant that slope. So if I highlight Celgene here and I click Open Chart, to the far right here, you can see where that little diamond is, and you can see that slope. It's almost vertical, right? Major slope. That's what you want to look for. This is where it'll save you a ton of time. So even if you search a huge universe of stocks, by clicking and sorting them by slope, you can quickly narrow that down to the ones that give you the highest chance of success here. Okay, and then you can sort this list any way you want. You can print it, you can cut and paste it into another watch list, whatever you want. Okay, it's all there. It's very quick, very easy to use, super simple. I love it. Here are some Forex pairs. Let's look at the Forex, the CAD. Now look, this is, has a very small amount of slope, right? If I open chart, you go here to the far right, you can see a very small amount of slope. It's just starting out here, okay? So it's really helpful. Let me zoom out so you can see that. So it really works well. Let me try to get to a couple questions before I hand it back to Jeff here. How much does it cost? Surely I'll let Jeff go through all the pricing for you. Johan is asking for the indicators that are involved in this. That's proprietary info. When we first decided to release this, I'll be honest with you, I did a presentation in Las Vegas. We had a conference in Las Vegas, and I actually taught the full system to the attendees. I revealed all the indicators, everything. And unfortunately, a couple days after the event, immediately, we had someone take that system, create a website that mimicked our website and started selling it, copying what we do. We had someone else take it, start a hedge fund, etc. So we had to, for security reasons, protect that information. So we've made some changes to the system since. It's proprietary, but fortunately enough, we have platforms like MetaStock here and teams like them that they can program it and make it available to you. So I really hope you enjoy it. It's worked extremely well for me throughout the years, all different types of markets. It's extremely consistent. If you have any other questions for me, I'll give you my email address. It's info@tradingwins.com, info@tradingwins.com. Direct the question to myself, and I'll be happy to respond to you. But I'm going to turn this back over to Jeff. He's going to tell you how you can take this indicator. And remember, with this comes the training class, where I'll go into specifics of which signals you should take and which you shouldn't. Best of luck. And Jeff, I'll turn it back to you. And I want to say once again, I'll stick around if there's any more questions, but I do want to thank you and your team again for having me on.
Yeah, thanks for coming. I'm going to remember to show my screen this time. So in any case, great job. Really appreciate your show and everything and coming in here today and all the work we did on the add-on. People love it. So really appreciate the relationship and the friendship and, all the work you've done.
Thank you for all your help with it.
All right, so let's make sure we're sharing the right screen. And let's just go back a little bit. So Vince did a great job of highlighting the different features of the program and that kind of stuff. I'm just trying to get control here of my PowerPoint. Let's try this. I love some of the tools I absolutely love about MetaStock, and I'm glad he spent some time in them, are the ability for you to go in and take a universe of, let's say, 4,000 optionable stocks. Or I filtered down mine a little bit, and I'll show you in the Q&A session exactly how I do that. But I scan about 2,500 stocks, and the ability to eliminate 97, 98% of that is absolutely beneficial because, again, what it enables you to do is it enables you to just ignore all the stuff out there. And what we want to do as traders is we want to be able to focus on those stocks that have an opportunity. So he did a great job of showing that. I also love the expert advisor and the ability for it to go in there and actually show you all the signals, give you that entry price, that entry advice. And we've had Veracity available for, I believe, like 2 or 3 years. And the people that pick it up absolutely love this product. I'd encourage you to try it out. What we also did is Vince and I sat down and we recorded some training sessions around just using Veracity and MetaStock, how to run your scans, how to look at the different signals, how to look at the subs. And so we include that with the download purchase as well. Vince has alluded to that. But let me just talk, so that kind of gives you a good overview. Vince does a great job of kind of giving you a good overview about what's included. The Veracity add-on is a one-time cost of $1,997 one time. What we're doing here at the summit is we give you a price of $999 to get it today. Now, we do cover that with our 30-day money-back guarantee, so you can try that. If it's not helpful for you, we can shut it off and you don't have to use it anymore. It does require MetaStock to operate, and we'll give you a trial to MetaStock with that purchase. To take advantage of that or to get some more information, or if you have questions, there's a lot of questions coming in, give us a call at 800-882-3040, or you can chat online with us at metastock.com/sales chat. It is also part of that Trader's Toolbox. And what I have to say about the people we have speaking today are there's some of the favorite people that we've worked with when you look at Price and the work that he's done, and Vince, and kind of the very, very systematic approach that they've got to trading. Coming up right here is going to be Barry Burns. He's going to talk to you about the Top Dog Trader, which this is a collection of really, really good add-ons that are available for MetaStock. If you bought them all, and you'd pay about $2,900 for all of them, okay? And they're all worth it. I would recommend you buy all of these. They're some of my favorite add-ons. But we're going to do a toolbox. So you can get all 5 of those add-ons. You can get 2 years of Stocks and Commodities magazine. You can get 3 months access to MetaStock real time. You can get 3 months of access to all of the news and information that's available in our Zenith program that's powered by Thomson Reuters News. You'll get that Unleash the Power of MetaStock. And normally, if you bought all of that separately, it's $4,138. The special that we're doing today is you buy it all, you pay $1,796, and that's it. So give us a call. The phone number is 800-882-3040. You can also visit us at metastock.com/sales chat. I'd really recommend you try this out and these products out. Been doing this for a number of years, and these are some of the most popular products that we've ever released. So with that being said, if you're not familiar with MetaStock, it's been rated #1 in its price category for literally 25 years in a row. We are offering extended trials of that as well. And I do want to take a minute to thank Stocks and Commodities today for sponsoring the event. Stocks and Commodities magazine, as you know, you came here today. In life, you're either going in one direction with your trading or going the other direction. You're either moving forward or you're moving backward. There's not as much of a thing about neutral, in my opinion. I do want to thank Stocks and Commodities for their sponsorship. They do a great magazine that you can get a copy of delivered to you every day. And to get a free issue, you can just go up to this URL, and I'm going to send that, and you can claim your free issue of the Stocks and Commodities. Also, if you do that, buy that Trader's Toolbox, you get 2 years for free. So